Let's go through some of these moves here. As we usually do with your rebalance, what's interesting to us, you raised your financial exposure. You were already big in that group. Now you are 31% exposed in financials. That's more than double the S&P.
So
is that correct, sir?
I believe.
Isn't that correct?
That is correct, Your Honor.
Entered as evidence.
I believe where we are in the marketplace right now is, let's ignore focusing on which way the S&P is going to go, higher or lower. That doesn't matter. It's about generating alpha. And there's a lot of negative correlation trades that are going on with the market right now. Semis to software, India to China, and financials to technology. So, Scout, 1 year ago, our exposure to technology was 28%. Our exposure to technology is now 16%. 1 year ago, our exposure to financials was 14%. Our exposure is now 31%. Could you make the argument that we're stretching the limit in that exposure to financials? I'll acknowledge that. Yes, absolutely. You can.
You think you're more than double the S&P.
At some point, that negative correlation trade is going to begin to have some mean reversion, and you'll see the capital go to technology away from financials, and you'll see the mean reversion in performance. But right now, you have to acknowledge that financials are a sector that has exhibited very strong performance, and also the earnings are there. You're talking about 20% EPS growth. You're talking about 12% revenue growth on the 50-plus names out of the 77 financials that have reported. Look at names that we own, like Bank of New York Mellon, JP Morgan, both up double-digit year-to-date, strong earnings growth. So there's a reason to be there. Interactive Brokers, another really strong name that we own.
All right, so the new ones that you now own include U.S. Bank Corp, PNC. So you really like the regional trade.
I call that super regional.
Super regional.
Yeah.
Thank you very much. Visa is new there.
Visa joins MasterCard. Not surprised at all. Visa has been in the ETF previously. It makes it return once again on both strong quality and strong momentum.
Capital One, CME, Gallagher, Aon. You like insurance too?
Insurance is right now one of the largest industries that we own, followed by financial services, software, and banks. Semiconductors, by the way, down to only 4%.
It's now the time to get bigger in the financials, Weiss?
I think there's a real question that's bubbling up in the financials, which is that will 25 again restart both the M&A cycle and the IPO cycle? And the people I talked to have real questions about that. Keep in mind, it wasn't supposed to start until mid-25, but the way we're seeing some of the stocks, some of the sectors act, it's a very legitimate question if that's going to occur. And part of that is the basis for loving the financials. From my standpoint, I think Goldman outperforms any environment, and that has so many levers to pull and so many solid businesses that I'm not as concerned about it. But for others that are highly dependent upon that, I think there's reason to be concerned.
All right, so you also sold Coinbase. You did, Joe. Bryn, you bought the Ethereum Trust ETF, the ETHA. So first, Joe, why'd you get out of Coinbase? And then, Bryn, you can tell me about this buy. But Joe first.
So here's an explanation of momentum. You have to look at the momentum and measure it in terms of what's the distance and how quickly does it get there, and then what's the response to that. So on October 31st, the strategy takes a position in Coinbase at 179. By November 11th, the position is up 80%. Since November 11th, through the rebalance, which was January 31st, that momentum has evaporated. That position in Coinbase, basically, it went nowhere. So that's the acknowledgement. For that time period, you completely lost the momentum, and that doesn't confirm the initial position that you're taking on October 31st that says, we think momentum is building. From our starting point, momentum built, and it went away.
Okay. Bryn, what do you think about that? I know you follow that stock as well, but what about your own trade?
Yeah, well, good trade, Joe. That was a good entry, good exit. So on Monday, or actually over the weekend, there was a huge amount of leverage that got unwound in the native crypto market. And so when Monday opened, Ethereum opened down 20%. So I bought the ETHA, which is the iShares. I think that this trades back up to 25. I think you're going to fill that gap to 25, and so it's a trade. I just took the opportunity. You don't see you don't see an asset go down 20% in one day so quickly. So I just thought it was a good opportunity to buy that iShare Ethereum Trust, trade back up to 25.